Thank you, guys. That was a great chat on payments. Next up, we're moving into Ethereum as financial market infrastructure. We have some of the bigger hitters in the game coming up on stage. We've got, following up, Eva, if you could come up. We've got Eva from Blockscout, the CEO here. She's and Blockscout is building an open source block explorer, one of the most integrated across the space. So it's an incredible product. Then we have, we've got Johan from Chainlink, the most sophisticated Oracle solution across the board at the moment. They secure billions of dollars of value, have powered Ethereum for a very long time, which is great. DeFi being a big part of that. Then we've got Pat from Pier Two, you know, a large institutional staking platform based out of Australia. And then we have Rong, who's at the Reactive Network. And I'll let you take over from there, Rong.
Hello, testing. Testing. Okay, thank you so much. All right, thank you so much, everyone, as well, for dropping by our panel. Today, our topic is institutional Ethereum infrastructure. Quite a mouthful, but it's also a very interesting topic. And today, we have esteemed, distinguished guests here, actually really experts into the individual fields, especially on this topic. And I think before we start, I'll probably like to invite our guests to really introduce themselves and actually on what they're doing and what the product is all about as well. Perhaps we can start with Eva.
Sure. So first of all, thank you for the Ethereum Foundation, the invitation to come to this event. And actually, so look at the topic of this event is really fun because about a couple months ago, actually, I was sitting at the other side of the table. I used to run Alipapers in UK, and then I have joined Blockscout recently as the CEO. So Blockscout is the #1 blockchain explorer in the world with open source providers. So we are actually serving lots of clients across the world. So some of them for the crypto community that you probably know about some of our native clients, but more importantly is that we've been widely serving the institutional customers in the past couple of years already. So that is almost like a hidden secret. So in the following sessions that I would like to share a little bit more about the work we have already been doing with the banks, with fintechs and other financial institutions. Thank you.
Thank you very much. Johan, please.
Perfect. Well, first off, thank you for having us. By the way, does the mic work?
Yeah.
Okay, great. All right, so quick intro about myself. I've been at Chainlink for the last 7 years. I'm currently the CBO there. Chainlink's mission has been, we believe in blockchain technology. We believe in the power of Ethereum to change the entire world. When you believe in that, you actually want to make it work. The end goal for our space is tokenizing the whole world. Every single asset goes on-chain. In order to do that, you need oracles. Oracles are the function which connects the real world to the blockchain world. So for the last 6 years, we've been powering most of Ethereum DeFi. We currently power around $80 billion in TVS. We've secured around trillions of dollars, maybe $25 trillion in transaction enabled. But we don't only create pricing oracles. We also created identity oracles, compliance oracles, to make it easier for RWA issuers to issue their assets on chain. We've created cross-chain oracles to be able to connect the different chains and the different L2s and L1s between in the Ethereum ecosystem. That's our vision. How do we create an oracle standard around all the data that's not on blockchain so you can actually tokenize the whole world on chain?
Thank you very much, Johan. And Patrick, please.
Thanks. So, Pier Two, we are an institutional staking service, which means that we run a lot of Ethereum validators and Ethereum infrastructure. And for the past 6 or 7 years, have been getting bossed around by Johan on the Chainlink side as well, and have been running a lot of infrastructure for the Chainlink network since its inception as well. The role that we play in the industry is really maintaining that high uptime standard and being a core pillar of infrastructure on Ethereum and powering Oracle solutions like Chainlink as well. So when it comes to servicing financial institutions today, We look at all of the standards that are required amongst like SOC 2, Type 2, all the compliance pieces that are required for high uptime, critical financial services infrastructure. And Pier 2 plays the role of providing that service both for staking and nodes and high uptime infrastructure.
Thank you very much. So I think as you guys can see, we have experts from Asia, Europe, Australia, if I'm not wrong, by accident. And but what we bring to is already offer solutions globally. And I think that's something that is also the topic for today. I think without further ado, before I jump to the questions, I do have to reintroduce myself just a little bit as well. I'm not going to take up too much of your time. My name is Rong. I'm CEO of Reactive Network. We built the world's first decentralized data execution layer. So if you build a smart contract on us, it can see events on other blockchains. And if you can see events on other blockchains, you can execute it as well. Something for developers and businesses to think about. Let me jump into the first question. And the first question is really setting a context. I think financial institutions actually they quite famously prefer to have their infrastructures sort of controlled in-house. And it extends all the way to, for example, their video conferencing software. They get an in-house team and do the whole thing themselves. What do you think are the key technologies they are looking for? And how will Web3 industry be able to step up to contribute? So I think this is focusing more on the technology side of the house. And I think perhaps if anyone is interested to perhaps start first. Yeah.
Okay, sure, thank you. So I think there are two sides here to the equation. Yes, financial institutions do like to run their own software. However, here we're talking about transactions. Our space is around how do you get the most efficient way to transact assets through blockchain technology, right? Now, transactions involve multiple parties. And these parties are going to want to use neutral technology. If I'm a bank, I'm not going to use another bank's software, right? I'm going to want to do my transactions on a neutral software, on a neutral infrastructure. So I think our space will have a need and has a need already, and you can see that with all the institutions adopting Ethereum today for neutral infrastructure. The second aspect here is our space needs standards, and these standards today don't exist for many of them. They're being built. We're working very hard on many of them. I think if you want to list three of the key things which are the most required today, one is compliance and identity. Right now, for an asset issuer, it's extremely manual to do any token issuance. They have a whitelist which they maintain off-chain. Nothing is automated. There is always a lag between the chain and the off-chain process, and it doesn't work. We're working on a solution to basically have identity and compliance be automated dynamically through an Oracle network. Because we do believe actually compliance can be done better on chain, but for that you need to build standards which currently don't exist. So that's one of the key things we're working on. The second thing is data. You cannot do any financial transaction without having pricing data on chain. How can I use, let's say, a tokenized gold asset as collateral if I don't know the price of gold, right? That's why we launched a price feed standard a few years ago, and that one is widely used. We announced yesterday one exciting partnership with UBS around it at Cybos. And the third one is cross-chain, because there will be a few cases where banks will want to issue their asset on their own chain, and then they will use other chains to interact with other assets. So we do think cross-chain will have a role to play still to connect these private chains to these public chains. And that's another standard around cross-chain, which we're working on through CCIP. So I think those are the main things and our main view on the whole technological landscape.
Thank you. I really like the point that Rohan has made. Fully agree. On top of that, probably a couple of things to add. So first of all, again, like a couple of months ago, actually, I was sitting at the opposite of the table that working for the institution. So actually, when the blockchain industry has been grew up and booming in the past almost decade, that for the institutions, I think it presents a huge opportunity. But meanwhile, it is an incredible challenge that I think people on the other side feel a bit scared for like what could come out of blockchain. So as a result, I think all of the banks, fintechs, institutions, they are trying to get into this growth game, trying to benefit from this growth wave as well. However, just like every technology, it takes time for the banks to really understand the game, get into the game, and eventually, if they're lucky enough, to win the game. So before that all happened, before they really understand every piece and bit of this game, actually, they need to start by working with the existing players, such as us, who are sitting here on the stage and over there sitting in this room. So as a result, actually, when they especially come to the infrastructure, that the institutions really like the concept of open source. Because that open source provided them an option that they feel like they are open to get in, they are open to opt out. So as a result, like companies such as ourselves, Blockscout, that actually will be used by couple of institutions already. So as a matter of fact, HSBC Lab is an existing user for Blockscout. This is again, that in public, not too many people knows about that, but from our own perspective, we can see that, it has been years the banks started to try different infrastructures, trying to get into this game. So I feel that open source, the infrastructure provider, is essential for all of these institutions. And another point, again, as Rohan mentioned, is data. So again, data is important for every industry, but it's extremely important for the financial institution. The reason behind is that if the banks cannot properly handle the data for compliance, for KYC, AML, it doesn't only mean about losing business. It means that they could lose their license, or their management team may risk of going to jail. So this is a huge thing for them. So again, that when they first get into the industry, they won't have too much data. They have to rely on existing players such as us to fill into the gap, to make sure that from day one they run the business in a legal and a compliant way. So as a result, I believe that infrastructure, data are essential for the institutions to get into the game. And players such as us, we have a huge opportunity to work with them.
Definitely agree, Eva. I think just touching on the question of how financial institutions are thinking about insourcing versus outsourcing, or the build or buy question. I guess it's not the perfect analogy, but maybe considering how a lot of companies, when the internet really kicked off, they were considering, do we build an internal intranet, or do we sort of look at building a lot of our services and rails on top of the internet? And I think that there's somewhat of a parallel here, whereby you've got layers like Chainlink and you've got layers like Ethereum that could be considered as the internet. They're a decentralized standard to pass communications through and messages through and value through. But in order to maybe satisfy some of the more detailed risk and compliance pieces and considerations within some of these organizations, they've got to look at, okay, we need to launch our own layer 2 on Ethereum in order to satisfy some of our risk and like security assurance requirements that we have internal to our company. Or we need to be running our own full node internally because we don't want to necessarily route all of our private transactions through an external third-party RPC service. So I think this not only applies to staking as a service, the business that we're in, where companies will often look at the build or buy question in many respects, like should we be running a lot of our own infrastructure internally, or should we be relying on a lot of our third-party services that are out there that can be running these staking machines and these validators? But it obviously also applies to the broader question of all of this open source infrastructure that is within the Ethereum ecosystem that can be leveraged. So yeah, I think to Johan's point, a lot of the considerations are going to be driven by risk and are going to be driven by like compliance standards that exist in the traditional financial system that need to be like met with a really clear security guideline and a really clear standard. And I think that's what the industry has really focused on in the last few years, and we're at that point now where we've got that real support coming from the US that's driving outcomes globally right now. People don't want to be left behind. They're building their intranets, or they're building their layer 2s right now, and they're building their tokenization systems, their block explorers, their Oracle systems, and they want to play. They want to be a part of this next web of value that exists. So yeah, it's a really exciting time to be a part of that.
Thank you so much. Thank you, Eva, Johan, and Patrick. I think to really sum it up, I think right now we're in a stage where we are sort of facing this breakout into the institutional adoption. And one of the things, of course, is there's a lack of standards. And there's therefore a lot of things that we need to kind of work with the institutions to bring all of that in. It's kind of like looking at the internet, it kind of have TCP/IP and what are some of the things. And I think Eva also brought up a very good point that open source kind of ethos of blockchain and some of the things as open source, or at least sort of like a little bit more decentralized, it gives institutions a lot of the options. And I think that's something that really resonates, I think, especially in today's session, since it's institutional Ethereum infrastructure. I think in the interest of time, I go on to the next question, which is there's actually a philosophical divide, so to speak, in opinions about how institutions view decentralization, actually related to what we discussed earlier. I think at the end of the day, I don't think institutions care too much about decentralizations. I think a lot of times, because we are the experts as well, we come forward and bring a tech, and it's like, hey, this can be used. And you can look at it, they're not going to be too concerned about the philosophy behind it. But I think in a practical sense, like from a technological standpoint, there is a decentralized solution. Of course, give them more options, but of course, there's other implications for security as well. And I think from end-to-end deliveries perspective, like how do you think the blockchain trilemma, so to speak, applies to this institutional adoption?
Yeah. Maybe I can start this time. So actually, to answer this philosophical question or philosophical way, that actually nothing's fixed. So everything's keep changing. So I think it's the same as the adoption of blockchain technology with the institutions. So at this moment, that I think it is still at a very, very early stage of this industry. So there seems to be a couple of challenges, include this trilemma that you mentioned before. So at this stage, it seems that some of these applications by centralized makes sense. I think that is why they started from here. But from our experience, that with the pilot that we're doing with a couple of banks, we realize that actually they do have an internal roadmap about when they are taking certain applications from the compliance data perspective, that they start with a centralized way because that seems to be the most efficient way of getting things done. But they do have their roadmap of how to make them more decentralized, how to make it more involved by lots of different parties. So it's just too early for them to disclose the roadmap or 100% confirm about the roadmap. But they do have the plan, and I have all the confidence that with the industry growing, with institutions getting more and more adoptions with the technology, that it will come to a stage that blockchain as a technology will take its ultimate effectiveness, and will come to the stage that decentralized, the trust, the transparency will be the final winner.
Thank you, Eva. It basically, just to build on what you are saying, is it basically a situation where actually it doesn't really matter whether it's decentralized or not, as long as they can have options, they can build on it. Even like a centralized, but it's white label, they can technically adopt it as long as the standard is good enough.
Yeah, I agree, yeah.
Thank you. Johan and Patrick, if any one of you have thoughts about this as well.
You want to go, or which?
Yeah, I think just on the topic of Vitalik and Ash probably touched on it a little bit earlier, of the trade-offs around things like TPS versus decentralization and security. And I think the fact of the matter is that a lot of the due diligence that's being performed by some of these global financial institutions is around security at the front and center, but then also things like uptime. Like Ethereum hasn't gone down in the last 10.5 years, and that's because of the emergent properties of decentralization. Like you've got client diversity and you've got the emergent properties of decentralization, which bring to life this network that in the last 10.5 years is incomparable to anything else that exists out there. So when you're looking for a layer and like thinking about these trade-offs, that's the piece that is actually being selected for now. And that hindsight might not have seemed like the right path when you saw a lot of the Solana traction and a lot of these like high TPS ecosystems really picking up. But when this review is occurring right now, it's almost as though Ethereum had this view the entire way, and of course it did, whereby like you need this decentralization property in order for the network to really retain its function and retain its security properties. So yeah, that's all I'd say. And I think Chainlink is building in a similar fashion whereby it relies on this redundancy and it relies on multiple parties being engaged, because the emergent property of decentralization is security and high uptime. Like that's where it really comes to. But I'll let Johan riff off of that.
Perfect, thank you. Okay, I think there is actually two very key properties which are extremely practical and not philosophic about decentralization. One is neutrality. If you're creating a global financial system, you do need to be building on a layer that's credibly neutral. This is why we need Ethereum. This is why Ethereum has been so successful. This is why institutions are going on Ethereum today. And actually, as the world is going more and more, you know, we're not going to go into geopolitics, but countries trust each other less and less, right? There is more and more tension between the East and the West. You still want these two parts of the world to transact with each other. But guess what? The less they trust each other, the more they need a neutral technology to be able to do these transactions. That's why we need blockchain. That's why decentralization is actually so practical and so critical to the whole success of this space. So the way we build Chainlink is actually, yeah, as you said, very similar. We abide by these values, not because of philosophical reasons, not because it's easy to do. It's really, really complicated, but it does matter. That's our key to adoption. That's how we improve on the current system. It's by bringing credible neutrality when you need it the most around the world. The second big thing is security. One property of our systems is they're deterministic. For any input, you get a certain output. And you can never go back in time. What does this mean? If you're feeding a wrong price for an asset during a financial transaction, you're going to execute the wrong trades. And the borrower or the lender is going to lose a lot of money. This is a no-go for financial institutions. One of the key reasons DeFi didn't take off before 2019, 2020 is because you basically had Oracle hacks every 2-3 weeks. This is why Chainlink was launched. It was to actually bring reliable data on chain so you could have a lending protocol that's not printing the value 1000x of like the Korean one, for instance, for the people who remember these days, right? This matters. You do need that. So I think decentralization is a very practical property. I think it's a requirement for our space to win. And I think that's how we improve on the current systems we have today. And I don't think there is a better time for us to bring these systems to the world when the world is going more and more into a multipolar, low-trust environment.
Thank you so much. Thank you, Eva, Johan, and Patrick. I think that especially just where we are right now, I think one of the very interesting situations, especially in like Oracle kind of use cases, is where as data goes into a decentralized infrastructure, the trustworthiness is extremely important. But as Oracle itself, which is an entity on its own, even like for example, Chainlink is also going towards decentralization to really make it more robust, more neutral. And I think that's something that I thought it would be interesting. Perhaps Johan, you can share a little bit more about like the journey that Chainlink did, and why did Chainlink needed to make certain decisions between like centralized, not decentralized, and so on.
Yeah, absolutely. That's a great question. We were decentralized from day one. We never compromised on decentralization. Now, what does this mean? It means the system might be, in some cases, slower than other oracles, which are running only one node, right? It means it's more expensive to run. It means you need actual and economic ecosystem that makes sense in terms of economics, right? So you need applications, you need end users to be paying for the Oracle system, because the Oracle system, in order to be decentralized, needs to be sustainable, right? Decentralization is not only decentralization of infrastructure, it's also game theory. How do you incentivize the different players to be honest? They have to be paid, they have to be compensated, right? So the way we built Chainlink was to be both decentralized in terms of economic system and to be decentralized in terms of infrastructure. It wasn't the easiest path, and I think Ethereum has been extremely similar in this regard. It's not the easiest path. It's not the least expensive. It's the most expensive by far, actually. But it works, and that's what we need. It brings security. It brings neutrality. Yes, the system will in some cases be slower, but at least it won't compromise on the core values this space needs, which again are around neutrality and again around security. Yeah.
Thank you so much. And perhaps Patrick or Eva may want to share more about your product as well in terms of like kind of, it's a trilemma, right? Like how decentralized are you going to get? How secure are you going to get? How fast are you going to get? And so on.
Sure. I think maybe just an interesting narrative that's playing out in the staking world at the moment, riffing off of Johan's comment before around ecosystems, east-west, maybe not trusting each other as much moving into the next 10, 20 years and needing to control shares of the transaction layer, I suppose. You are seeing like clear efforts from nation states to become a part of the base layer now, which is Ethereum in many aspects. So you're seeing, whether or not it's sort of directly state-sponsored or not, but you're seeing a lot of support from nations viewing Ethereum as like a key trust layer and a key piece of financial infrastructure that they need to either be a part of by running validators or somehow sort of drive a value accretive strategy within in order to have their share of the network that they can rely on to transact into the future. So I think that's a really unique part of the staking world that's playing out. But maybe just touching on the Chainlink journey as well, because we've been a part of it since the first Oracle deployment in 2019. It's been fantastic in the sense of just like seeing that evolution. And prior to Chainlink deploying on mainnet and powering like Aave and Synthetics in the early days, you saw some of the centralized oracles that just kept leading to exploits. And correct me if I'm wrong, Johan, but I believe there hasn't been a Chainlink exploit since deployment. And as a result, you do see the value of these neutral systems playing out in these decentralized systems. So yeah, decentralization's the way.
So same as Chainlink, actually, Blockscout from day one is a blockchain native application that we've been fully distributed. However, in the past couple months, while we were doing the different projects with the banks, with fintech institutions, we understand that they are still at a stage that they're probably going to start from a centralized way and gradually go into distributed way. So by working with these banks, actually we do not have a problem to catering there in terms of their risk appetite, their ways of doing things. But we're very confident that we'll bring them to the fully distributed mode very soon. Yeah.
Thank you so much. I think that's why I think a lot more players coming into this field are really looking, sort of shifting back towards this decentralization idea, because it's kind of what my company is doing, being a decentralized data execution layer. The usual way of doing it is to take the data off chain, process it, and come back on again, which is, of course, that part will be centralized. And we thought that, hey, what we're doing will be difficult. What we're doing will be actually, it might not necessarily be faster all the time. But for majority of cases, it is better because it's decentralized, that's one way, it's secure, and actually the same kind of tech stack are talking to the same tech stack. Obviously, reduce a lot of potential friction along the way. So I think that's something that I think we're increasingly seeing things happening on this, in this space, and I think with institutions coming in, that will be something they will be looking for as well. It's like, okay, this makes sense to me because by design, it is a lot more secure. It fits a lot of my regulatory and business needs. I think in the interest of time, I think thank you all so much for being here with us today, and thank you, Eva, Johan, and Patrick for sharing their thoughts with everyone today.
Thank you so much.
Thank you.
Thank you, everyone.